All right, let's talk about Yahoo. The Japanese tech giant just dropped its latest quarterly results. And at first glance, the numbers are, well, they're kind of weird. But once you dig in, there's a really powerful story about growth and some big strategic moves. Okay, let's get into it. So right out of the gate, you see the puzzle. For their first quarter, Yahoo hit a record high for revenue, up almost 6%. Awesome, right? But then you look over and see operating profit is down a sharp 11%. So what's going on here? Are they growing or are they struggling? The headlines give you two totally different signals. And that's the big question we're going to answer. To figure it out, we've got to look past those top-line numbers and really get under the hood of this massive company. So first, let's decode these numbers, because the real story here isn't about bad performance, it's actually about accounting. Yeah, the company is pretty clear about this. That 11% drop in profit, it's not because the business is doing worse. It's because last year, in the same quarter, they had this big one-off gain from selling a subsidiary. It was a one-time thing that made last year's number look way bigger than it normally would be. So without that, the picture is completely different. To get a real picture, the company tells us to look at a metric called adjusted EBITDA. Now, don't worry about the jargon. It's just a way of measuring profitability that strips out all that one-time accounting noise. It shows you the true health of the business, day in and day out. Honestly, it's the number that really matters here. And when we look at that number, the story becomes crystal clear. Check this out. Both their revenue and their adjusted EBITDA, the number they say to focus on, both hit record highs for a first quarter. The business isn't just healthy, it's literally posting record results. That whole profit drop was just accounting noise. Okay, so we've established the company is growing. The next question is, where is that growth coming from? To figure that out, we've got to break down their three main business engines. So think of Yahoo as having three main parts. The biggest is commerce. That's stuff like Yahoo Shopping and the ZoZoTown fashion site. That's about 44% of the pie. Then you've got media, their ads and content business, at 36%. And finally, there's the strategic business, which is mostly their payment and fintech services. It's the smallest slice, but trust me, it's the one we really need to watch. And boom, this chart just says it all, doesn't it? Look at the difference here. The media business is basically flat. Their huge commerce business is growing at a solid but not amazing 3.5%. But then you've got the strategic business. It is exploding, up over 22%. This one segment is basically carrying the entire company's growth on its back. So what exactly is this strategic business that's doing so well? Well, the answer is a name that's become an absolute powerhouse in Japan's digital economy, PayPay. If you want one number to understand what's happening, this is it. This is the year-over-year growth in adjusted EBITDA for that strategic business, 264%. And no, that is not a typo. Incredible. And all of that insane profit growth is coming from PayPay. You know, for years, PayPay was all about growth, getting more users, more stores. Now, that bet is paying off, big time. They flipped the switch from just growing to actually making a ton of money. It is now a true profit engine. The scale here is just mind-blowing. In just one quarter, PayPay processed 4.5 trillion yen in payments. That's over 28 billion US dollars. This is not just some popular app. It's become a fundamental piece of Japan's economic infrastructure. Okay, so your company is posting record results, and it's all being driven by the wild success of PayPay. What's your next move? Well, if you're Yahoo, you make some really bold moves to capitalize on that strength and unlock even more value. First up, they moved fast to return some value to their shareholders. At the end of June, the board gave the green light for a share buyback program. It started the very next day, July 1st, and by August 20th, it was already done, way ahead of schedule. They did not mess around. And here's what they accomplished. They spent over 32 billion yen to buy back almost 1% of the company's stock. It's a huge vote of confidence from management, basically saying, we think our stock is a great investment. A share buyback is a big deal for sure, but it's honestly nothing compared to the other major move they announced, and this one is all about their star player, PayPay. And there it is, the big one. On August 14th, Yahoo confirmed that PayPay has confidentially filed to go public with an IPO in the United States. This is a massive, massive step. They're planning to introduce their crown jewel to the entire global investment world.
So here's what we know so far. The plan is to list on a U.S. exchange using what are called American Depositary shares. That's just a fancy way for foreign companies to trade on American stock markets. Now, the timing and how big the offering will be, that all depends on the market. But Line Yahoo made one thing very clear. They plan to stay in control and keep PayPay as a core part of their company, even after it's public.
So let's just tie this all together. What's the big picture? Number one, behind some confusing headlines, the company's core business is actually performing at a record level. Number two, that strength is almost entirely driven by PayPay, which has successfully turned its massive user base into massive profits. And number three, management is now making big, decisive moves, like a buyback and a huge IPO, to unlock all the value they've created.
And all of this brings us to one final huge question. When you take your most valuable asset and prepare to list it on the world's biggest stage, that's a major statement. It really makes you wonder, is this the first step in a bigger plan for Line Yahoo to go from being a Japanese powerhouse to a true, recognized global technology leader? And that, right there, is the real story to watch. Thanks for joining us.